In today's video, we're going to be talking about draw on liquidity. Now, to properly determine your draw on liquidity, there are two very important questions you always need to ask yourself. The first one is, where is price coming from? And the second one is, where is price most likely to go next? These two questions are extremely important because once you understand where price is coming from, there's a very high probability that you'll also understand where price is likely to go next. Now, these are some of the areas I personally use when defining my draw on liquidity. These are the ones I prefer the most. The first one is previous highs and previous lows. Examples of this include previous weekly highs and lows, previous daily highs and lows, previous session highs and lows, and so on. The second one is the concept of internal range liquidity to external range liquidity. And what does that mean? It simply means that when price is at an internal range liquidity, my draw on liquidity automatically becomes the external range liquidity. And when price has just taken out an external range liquidity, my draw on liquidity automatically shifts back to the internal range liquidity. Now let's head to the chart so I can show you some real examples of how I've been able to map out my draw on liquidity in the past. I'll be using examples that I shared for free in my free community so you can see that this isn't just hindsight. This is something I actually use, and it's something that's been very impactful. Now, the first example I'm going to show you happened on the 1st of December, 2025. This was the analysis I shared in my free community. I said, the market just opened and this week looks very strong for EURUSD and GBPUSD. All higher time frames are aligned to the upside, so I'm expecting a nice expansion to the upside this week. And then I marked out some areas where I would expect price to get to. Now let's go to the chart on that same day so you can clearly understand why I was bullish. First of all, when we head to the chart, the very first thing I noticed was that price created an SMT divergence. Here we can see that EURUSD formed a higher low, while GBPUSD formed a lower low. That was the first indication that price was most likely heading higher. After spotting this SMT, my initial draw on liquidity on the weekly automatically became the previous week's high and this previous swing high right here. These are the areas where I expect price to reach if the market truly wants to be bullish. Now, because this is the weekly chart, we also need to drop down to the daily time frame to refine our analysis. As day traders, we're not necessarily focused on what price will do next month or even next week. Most of the time, what matters most is what price is likely to do the next day. So when we drop down to the daily chart, this is where things get really interesting. The first thing I could see was that price reacted from a bullish fair value gap and clearly respected it. Not only that, the last bearish unmitigated fair value gap was disrespected. When a bullish fair value gap is respected and a bearish fair value gap is disrespected, that starts to tell us we're in a bullish order flow. Now, what really confirms this is what happened with the previous daily candle. We can see that price dipped below the previous daily candle and then retested that inverse fair value gap and still closed above the previous day low, which is a very, very strong indication that the next day is likely to expand to the upside. Because of this, my draw on liquidity for that day became the previous daily high, this swing high, and the other daily highs just above price. And as you can see here, price clearly reached our draw on liquidity for that day. Now let's move on to another example. Now this was sent to my free community on the 13th of November, 2025. And here I was clearly telling them that I was expecting higher prices on GBPUSD. Now let's go to the chart so I can show you exactly why I was anticipating higher prices. At the beginning of this video, I mentioned that to properly determine our draw on liquidity, we always need to ask ourselves two key questions. The first question is, where is price coming from? And the second question is, where is price most likely to go next? Now, if we ask ourselves where price is coming from at this moment, I believe we can all agree that price clearly rejected from a bullish fair value gap. Not only that, price swept the previous candle's low, but closed back above. So what does this tell us? It tells us that price is currently inside a bullish fair value gap and is actively rejecting it. Now the next question becomes, where is price most likely to go? The answer is simple: the previous day's high and the swing highs above price. And what did price do next? We can clearly see that the following day, price expanded impulsively to the upside and took out all of our drawn liquidity levels. Let's look at another example. This one happened on the 29th of October, 2025. And this was also something I shared in my free community. At that time, I told the community that the market was still bearish and that I would remain bearish until price took out this specific swing low. And this right here was the exact swing low I was referring to. So again, let's ask ourselves the first question. Where is price coming from? The first thing I noticed was an SMT divergence. But that wasn't all. We could also see that price was gradually pushing to the downside. And as price continued pushing lower, it was clearly respecting bearish order blocks. So we had price trending downward, respecting bearish PD arrays alongside SMT divergence. With all these factors combined, the next most probable place for price to go was this swing low right here. That is why it was marked as the draw on liquidity. And what did price do? In a short period of time, it took out that low. Now I want us to start going through examples week by week so you can clearly see my thought process on each trading week. This will help you understand how I think about the market in real time. Now on this chart, this is the GBPUSD chart. When I come to a week like this, the first question I ask myself is, where is price coming from? Price was in a bullish structure, then it reached this high, swept that high, and after that, we started seeing bullish fair value gaps getting disrespected. But as price began disrespecting bullish fair value gaps, it eventually created a bearish fair value gap. So on a week like this, what would I be expecting? First, I'd expect price to retrace into this bearish fair value gap before the bearish move begins. And where would my draw on liquidity be? It would be this swing low right here, because that's the clearest pool of liquidity available. So what I'm anticipating is a bullish move into the fair value gap, followed by a bearish move toward the draw on liquidity. This means I can potentially look for a short-term bullish trade into the fair value gap, and then shift my focus to the overall bearish move toward the draw on liquidity. And as you can see here, price did exactly that. It retraced into the bearish fair value gap and then pushed back down, hitting the bearish draw on liquidity. Now let's continue. After price takes out a higher time frame liquidity level, that's when analysis becomes quite complex, and it's because we are usually left with two possibilities. Either price continues in the same direction, or we see a full reversal. So how do we know which one will happen in this scenario? The answer lies in this fair value gap. If price retraces into that fair value gap and respects it, then we should expect continuation to the downside. But if price retraces into it and completely disrespects it, That tells us the move was likely a liquidity sweep, and we should start looking for reversals. So what did the next week do? We can clearly see that price closed above that bearish fair value gap, effectively turning it into an inverse fair value gap. So now, what should we be expecting? We should be expecting price to start pushing to the upside in the weeks ahead. Not only that, the following week, price also left us a bullish fair value gap. Now we have a bearish fair value gap and a bullish fair value gap overlapping, which makes this area a very high probability zone. So when I see this, my expectation for the next week is simple. Price should dip into this bullish fair value gap and then push higher. And where would my draw on liquidity be? It would be this swing high just above price, because that is the most obvious liquidity pool within this area. And what did price do in the coming weeks? As you can see, price pushed straight into that swing high, which is our draw on liquidity. Now, after price takes out that swing high, the following week it left behind a bullish fair value gap. And because this was a significant swing high, we're now left with two possibilities. Price might respect this fair value gap, or price might completely reverse. The answer lies in how price reacts to that fair value gap. So let's look at what eventually happened. Few weeks later, price tapped into that fair value gap, and it's clearly showing rejection. Price moved into the gap, but it couldn't even close inside it. Instead, it gave us this strong, impulsive, bullish candle, which was clearly different from the kind of price action we saw after price took out the sell-side liquidity below. This price action is telling us very clearly that price wants to continue moving higher. And if price wants to move higher, then where is the most likely draw on liquidity that we should be targeting? It's right here. This overall external range liquidity at the swing point. That is where our target should be in the coming weeks. And what did price do? Price impulsively moved straight into that level and immediately started rejecting from it. This is exactly how I find my draws on liquidity, by simply understanding where price is coming from and using that to forecast where price is most likely to go next. Once you understand this and start practicing it on your own, you'll see yourself getting better and better over time. So if this video was impactful for you, leave a like and subscribe. I'll see you in the next one.